Investors caught some relief today as the stock market rallied until midday once the Fed minutes were released. Also, President Trump is weighing whether or not to strike Iran. Looks like we'll have another weekend that we are crossing our fingers we don't get a post on True Social that we are going into war and the US attacks Iran. Before we get into today's episode, please make sure you go over disclaimer. Anything we discussed today, please, as always, do your own research. This show is for entertainment purposes and educational purposes only. If you guys decide to put any money into the market, please understand that I am not a professional and you should seek advice and consult a professional. All right, let's get into it. First, I want to discuss how the stock market moved, and then we'll go over some of the news in the market today. So first, major indexes, the S&P 500, the NASDAQ, and the Dow, I like to call them the scoreboards, were all positive today. S&P 500 closed up just over 0.5%. NASDAQ had a nice day, closed over 0.75%, and the Dow closed up 0.2% today. We saw gold rally. I thought as we got these reports about Trump weighing attacks on Iran that we might see gold spike overnight. But from last I checked, it doesn't look like that is the case. Maybe tomorrow we'll get a little jump. And the VIX, volatility index, lower today by 3%, but moved higher again as the Fed minutes were released. And we will get into that in just a moment. All right, so let's go over to some of the top stories that moved the market. So if you watched episodes previously, I like to use Google Gemini, but also I've been using Claude as well. As my name is Claude, I think I am obligated to use Claude AI. And especially since they just released an updated model that is probably a little bit better than what Gemini is providing. I've also seen some hallucinations in Gemini. Maybe some of the prompts that I've been putting in lately are probably maybe too heavy, but I wasn't liking what I was getting back. So I'm starting to incorporate Claude specifically into my research. And then if I want to really dive in and kind of dissect trades or maybe help trying to figure out some investment strategies, I might start using Claude going forward. So let's use Claude AI first, and we'll discuss some of the biggest topics that may have moved the market today. This is really a story that came out yesterday, but NVIDIA and Meta expanded their AI chip deal. So Meta and NVIDIA announced an expanded partnership with NVIDIA supplying millions of Blackwell and Rubin GPUs, along with CPUs and networking products for Meta's data centers. Remember, in Meta's most recent report, they stated they are going to up their CapEx. And it looks like some of that money that they're going to be spending will be with NVIDIA. And because of this announcement, NVIDIA shares have spiked. Based on the indicators that I watch, really the MACD and checking the RSI, amongst others, it looks like, well, at least before the Fed minutes were released, that we were gaining some momentum again. All three indicators on the daily, the 4-hour and the hourly, all lined up, and we're all saying bullish and all saying, all right, all systems go. We have momentum again in NVIDIA. But that has been under attack once the Fed minutes were released, and we'll talk about that right here. So Fed minutes was released around 2 p.m. Eastern, and they were closely watched as most recent Fed speakers haven't pushed for accelerated rate cuts. No rate cuts or higher for longer is not something the market wants to hear. They want to see those rate cuts. It makes borrowing and a little bit cheaper, which is beneficial for the companies in the stock market that we love and that we're invested in. It's also beneficial for gold as well. And if you are into crypto, it is beneficial for Bitcoin as well. So this was released. Some folks were even, I believe in the article I read, some even were considering possible rate hikes based on the data they receive in the future about inflation. So that's the last thing we want to hear is anyone talking about rate hikes. Now, I'm not sure if there was people manually going in here and kind of selling stocks or selling the market overall or taking some risk off, or is this kind of the computers just reading and scamming these reports and then just kind of dumping things automatically. So we did get a nice bounce, and we can go to the charts and see exactly what I'm talking about. So we did peak around, and I believe this is Eastern time. Yep, Eastern at 1 o'clock Eastern. We had a peak, and then we just slowly, where's the 2 o'clock at? Slowly went lower. And this is around 2 o'clock, and we pretty much hit very close to the low of the day. But we did get a bounce back at the end of the day, so that was good to see. The Fed minutes came out around 2 p.m. Eastern. We got very close to the bottom of the day, but we did rally higher, kind of like the mid-level of the day, at least for the S&P 500. NASDAQ, kind of similar. Charts look very similar when you look over here. Same thing as the Dow. So it was nice to see that shares did push higher. Before we go on any further, please, if you enjoy these episodes or get anything out of this research or information that I'm providing, please make sure you like this video. Make sure you subscribe. Just gets me in the... It's good to see people are receiving this and enjoy the time that I'm taking to kind of do this research and kind of explain some of the things that I'm seeing in the market. So I would truly appreciate that. Moving on, Bill Ackman, Pershing Square grows their Amazon stake. Whoop-de-woo. But it was good to see because Amazon was on a 9-day skid before yesterday. We got a nice bounce. We had actually a positive day yesterday for Amazon. I'm invested in Amazon long term, and I have some options in Amazon and their most recent earnings. I like what I saw as far as AWS growth. AWS. A lot of investors, a lot of Wall Street was paying attention to that. But the thing that really killed them was that capital expenditure. They're spending a ton of money on AI infrastructure, and investors did not like to see that. Some of that money that they were spending, they would like to see returned to shareholders, but they are going to spend. Now, long term, I don't mind it as a long-term investor because I believe, I'm not a skeptic, I'm just going to believe that these guys know what they're doing. The management knows what they're doing. And yeah, we might not get a return on our investment maybe this year, but in the future, 2, 3, 5 years from now, all that investment is going to reap the rewards. And I'm willing to wait long-term, but it has definitely killed me in my options portfolio. So that kind of put a sour taste in my mouth, but long term we'll get that money back. I am a believer in Amazon long term. Strong earnings for key companies. The AI trade has been under attack, but we did see some companies in the AI trade and software, because software is getting his butt kicked as well. Companies like Cadence Designs, shares moved higher about 9%. 9%. If you are in the Patreon group, I'd also have a Patreon group. I would love for you guys to join. You can find the link. It should be in the description of this video. Click that. You can get a lot of this free information that I put in there. And then if you really want to get busy with me, see what trades I'm entering in, what companies I'm invested in real time, you can join that Patreon group. And if you want help with assistance to kind of building out your portfolio or just seeing my strategy and how I'm managing my six-figure portfolio, and which is growing, definitely jump in the Patreon. I would love to show you, and hopefully I can kind of show you my strategies, and you can model that and fit your own personal strategy. If you're someone who is looking to start your investing journey, or just wanted someone else as an accountability partner, whatever the case may be, I'd love for you to jump in, and I would love to help you as best as I can. Cadence Design did well. Definitely check out and do research on EDA. But company that is in the software and in cybersecurity, Palo Alto, which their shares typically do sell off after their earnings, but their shares fell about 5% today after their most recent earnings report. Like we discussed in the title in the beginning, U.S.-Iran negotiations and geopolitical developments. Now, I think this is something that is important that everyone should be aware of, especially if you're invested in the market. So futures had pointed to a lower open, but improved after the ADP weekly jobs number came in ahead of expectations, and a positive commentary came out of U.S. and Iran negotiations this morning. Separately, the U.S. plans to sell a large arms package to Taiwan, but that looks like that might be in limbo ahead of Trump's trip to China, as Beijing seems to be putting pressure on the U.S. supplying Taiwan anything that can help them defend their territory. Because if you're familiar, China it looks like slowly but surely gearing up to potentially attack or allegedly attack Taiwan and take over that territory. Now, I'm hoping that Trump is what he's saying. They have a strong relationship with President Xi of China, and that will never happen as long as he's in office. But who knows what happens after he's in office, if someone's going to come in and has that same relationship, or if Beijing changes their tone and takes that as an opportunity to strike, as there is a change in leadership in the United States. So that is something you definitely will monitor. If you're someone who's invested in a Taiwan Semiconductor, that is a story that you definitely want to stay on top of. All right, switching over to Google Gemini, kind of hit on some of the topics that we may not have discussed there. We did talk about NVIDIA and Meta. We talked about the Fed minutes. Just kind of reiterate, FOMC minutes from the January meeting were released today, revealing a two-sided risk stance. While inflation is cooling, 2.4%, the Fed is increasingly wary of sticky core services. And what's the takeaway? We are in a, quote, higher for longer hiatus, likely waiting for Kevin Warsh, that is President Trump's pick to be the Fed chair after Powell his term is over, to take the reins for any major policy shift. Now, remember, President Trump wants lower rates, so you'd imagine he would pick someone that is going to potentially lower those rates. And Kevin Warsh, there's been mixed signals whether he's hawkish, whether he's dovish, and what is his stance or what is his policies, and how is he going to operate as the Fed chair. So time will tell what comes of that. So be mindful of that. We talked about Amazon bottoming out. Looks like we found a bottom and shares are pushing higher. That is good to see. Vertiv, they are a major partner to NVIDIA. NVIDIA has these GPUs in this built out system for data centers. And Vertiv is a partner that keeps those chips cool so they can operate efficiently. It says Vertiv is consolidating. Following last week's 20% explosion after its blowout earnings report, Vertiv spent today consolidating its gains. The market is beginning to price in the, quote, liquidity cooling mandate as an industry standard rather than a niche requirement, lifting peers like Eaton in the process. So these industrial companies like Eaton and Vertiv, they are definitely reaping the rewards of that big spending from Amazon, from Meta, and from Google as well. A lot of the money is going to Vertiv. And last but not least, looks like Scott Bassett spoke about the one big beautiful bill and those tax refunds, a lot of money that's being returned to us, the taxpayers, and that can be kind of like a quote shadow stimulus in order to prop up the economy. What do we like to do as taxpayers in the United States? We like to spend. We are consumers, and some of those consumer-facing stocks, like your American Express or maybe even your DraftKings shares are pushing higher. I believe American Express might have hit an all-time high today or very close to it. DraftKings is under a lot of pressure. I've talked about that previously. I hold it in my portfolio. Down quite a bit on those shares. I've been pretty much catching a falling knife because I don't believe Wall Street really understands the business. The kind of CEO of DraftKings, Jason, I think it's Robbins or Rollins, he spoke to the perceived disruption in the company with these prediction markets. Well, DraftKings has their own prediction markets. And yes, Kalshi and Robinhood, who partners with Kalshi, they're seeing a lot of business and a lot of growth in the prediction markets. But as far as the amount of money they're taking in, or as far as market share, a lot of those customers that are playing in prediction markets on Kalshi, those customers are primarily in Texas and in Florida or California. And those are states that do not have a traditional sports book regulated in those states where DraftKings or a FanDuel operates. So they're not really taking a whole lot of business from DraftKings. They're getting business from the places that don't have regulated online mobile betting or the traditional sports book because the state has not legalized it. Now, these prediction markets are regulated by the federal government, and there's been a lot of back and forth whether or not, I know Nevada is trying to push back and trying not to allow these Kalshi and Polymarket and these other prediction markets to operate in their state because they are going against the state legality, for a lack of a better word. I'm not even sure if that's the word I should be using. But they're kind of circumventing that and whatever the state's rules and regulations are, and they're going on top of their head, and they're letting Kalshi operate in those states. So with all of that being said, I think the downward pressure on DraftKings shares are really overblown. It's not really kicking the core business of DraftKings butt as far as taking market share as it might be perceived. Yes, DraftKings had a lighter guidance for 2026, but the CEO spoke about in 2025, they were really aggressive with their guidance and they missed. And so they want to kind of get back to their roots rather than over promising and under delivering. They want to under promise and over deliver. And so I believe that they will do that. Hopefully we get new states for DraftKings to enter in 2026 or maybe in 2027, which could be beneficial for their core business. But I'm willing to just kind of sit in DraftKings for right now and wait for their shares to head higher over $30 and heading back towards $40 because I believe the core business is still intact. There's really not a major disruption to it. These prediction markets, we're not going to know what's going to happen, especially if these states band together and they find a way to either kick out prediction markets altogether, or maybe they decide to kind of do what they do on the state side and they really tax these prediction market operators, which is going to kill their margins because their margins are so small with the way that a prediction market operates and how their revenue stream comes in compared to a traditional sports book. Traditional sports books make hand over fist more from us wagering and placing bets than a prediction market does. Because in prediction markets, you're not going against the house. You're really betting against each other. And the prediction markets are just set up to provide a liquidity in the system in order for us to trade back and forth. and we're not actually betting against the house. Rather, if you're betting on a DraftKings or a FanDuel, you're going against the house, and the books use data to see where the money is going to kind of create these lines to make it favorable, so they can they're not really, if a favorite wins, they're not losing a ton of money. And a lot of the reason why DraftKings kind of underperformed. A lot of the favorites were winning this past season for the NFL. And so the NFL is really big for the sports books. NFL season's over, but we do have March Madness. We have the Olympics going on right now. We have the basketball playoffs. We'll have baseball coming soon. I believe hockey is on right now. PGA Tour is starting to ramp up. So we're kind of past the kind of peak NFL season for the sports books. But remember, in Q1, we still had the Super Bowl that is in the current quarter that we're in. And we're going to have March Madness as well in this quarter, as well as NBA and all the other sports that are in the first part of the year. So I know I talked a lot about DraftKings, but I feel like I understand this company more than kind of the analysts that cover this. That my background in the casino industry for over 15 years. I really understand sports books. Never worked in a sports book, but I know how they operate, and I've done a lot of research and understand how DraftKings business operates. And I don't really see these prediction markets as being something that's really going to disrupt DraftKings business model over the long term. If anything, they're going to open up their own prediction markets, which is DraftKings Predictions, which is already available. And they have so much data on customers that like to bet. I believe that they'll be able to, get new customers that they didn't have the option to interact with in states that are not regulated. And if those states do turn the green light on and they decide on the state level to allow DraftKings or your FanDuels to operate in those states, I think they can easily pull those customers in the prediction markets of DraftKings Predictions over to the traditional sports book, and that could be amazing for them. So if you like this video, again, please like, please share, please subscribe, and I will see you guys on the next one.